makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. The HSBC Chief Executive, Noel Quinn, is unexpectedly stepping down after nearly 5 years in the job, while Europe's largest bank says they'll consider internal and external candidates. A difficult start to the year for German automakers, with earnings tumbling 20% at VW and more than 30% at Mercedes in the first quarter. Plus, French economic growth accelerated in the first quarter, boosting hopes that the euro area can emerge from a mild recession. We'll bring you the figures from Germany in just a moment. Now let's also take a look at the European markets map. Now, a lot of the focus will be on cross-asset, especially ahead of the Fed tomorrow. We're also trying to wade our way through some of the earnings. I was looking at some figures. Bloomberg Economics is really our go-to place, and Bloomberg Intelligence is our go-to place to get up-to-date analysis on some of the earnings trends. If you look at VW, so profit fell more than expected. But actually, if you look at early results from U.S. reporting season, they suggest that more than 80% of companies in the U.S. are beating expectations. Now, the German preliminary first quarter GDP, a little bit better than expected. Again, we were expecting a 0.1% rise. We have a 0.2% rise. We had France, and we'll put it all together. The Italian also, first quarter GDP, a touch above estimates. Now, let's get on to the U.S. futures, because, of course, a lot of the focus is not only in what the dollar is moving, but what futures are doing ahead of that Fed tomorrow, which is expected to be a little bit more hawkish. So S&P futures, NASDAQ futures practically unchanged. And then we have the Bloomberg Dollar Index 1,261. Now, the HSBC Chief Executive, Noel Quinn, is unexpectedly stepping down after nearly 5 years in the job, triggering a search for a replacement at Europe's largest bank. Now, the surprise move came as the bank reported pre-tax profit that slightly beat expectations and announced a share buyback of up to $3 billion. Now, let's get more with Tom Metcalf, Bloomberg's managing editor for EMEA Finance and Investing. This is a big deal, Tom. I mean, we weren't expecting it. Maybe the board was not expecting it, because now they've launched a search for the next chief executive. What's been the reaction so far?
Yeah, absolutely surprised. You know, I never normally sleep well the night before HSBC results, because you never quite know what's going to come. But yeah, getting a call at 5 a.m. saying Quinn was stepping down was not in the plan, at least. And so, yeah, I think a lot of people, the feeling was, you know, he'd done a good job of restructuring the bank. He was moving it along, and there was really no sense that, you know, after 5 years, he was going to be keen to retire. So, you know, Quinn out there saying, look, I've done what I wanted to do. I'm now keen to sort of have what he calls a portfolio career, so probably a bit less travel than you might get as HSBC CEO. But yeah, broadly, analysts are coming through, looking at those sets of results, pretty strong, but saying, yes, tempered slightly by this surprise announcement, because obviously it does raise questions. Who is going to replace him?
So, Tom, any insight on that? I mean, again, you know, under Noel Quinn, HSBC actually changed quite a lot. He really focused on Asia. He kind of pulled out of France, and also, you know, cut back on the other developed market, U.S., that they were quite present in. What kind of a leader does HSBC need now, at a time where, you know, Noel Quinn positioned it more towards China, but actually, you know, the U.S. bashing of China is real?
Yeah, I think it's really carrying forward that strategy. It seems to be bearing fruit right now as you look at today's results and obviously the share price in recent months. So I think, you know, in terms of what HSBC may be looking for more than anything is someone with those ties to Asia, someone who really understands, you know, Hong Kong, the China market. But, you know, they're very clear they're looking both internally and externally. And, you know, as you look around at the pool of available candidates, there's not someone who fills that very sort of difficult remit of experience of running a big global bank, very good experience with China. Those people are very thin on the ground, so I think it's going to be a bit of a tough process, but it'll be interesting to see who they come up with.
Yeah, and Tom, so we know that he's, of course, staying on until they find a replacement. Again, how unusual is it for a chief executive whose legacy is quite good to step down after 5 years? We know he talks about, you know, a work-life balance. I mean, this is a lot of travel and a lot of going around the world.
Yeah, I mean, it speaks to maybe how intense the job is, right? But no, I think broadly speaking, it's a surprise because, you know, CEOs, when they're kind of on a roll like this, tend not to sort of step away. And that's been the main thing, is he's been in place for about 4 years and a bit longer when you include his time as interim CEO. But, you know, you did get the sense this was, you know, this sort of job of a lifetime for an HSBC lifetime lifer like himself. So, yeah, it'll be interesting to see what comes next. But certainly all the messaging is this is, certainly a decision he's made. And, with him staying on and bedding in his new successor, it seems like, very much was a decision he just came to and decided he would just leave.
Tom, thank you so much, as always, for your wonderful insight. Tom Metcalf. So now we know Tom does not sleep well before HSBC earnings because there's a lot going on, but no one, frankly, was expecting this big news today. Tom is our managing editor for EMEA Finance and Investing. Now let's return to GDP figures with our guest, Marcelo Carvalho, BNP Paribas Global Head of Economics, and Bloomberg's Justina Lee. So thank you both for joining us. A lot of the focus, of course, is on GDP figures. A lot of the focus is on some of that underlying inflation in Europe. It feels, Justina, for the moment, we had France, we had Italy, we had Germany, a touch better than expected. So nothing huge that will steer or change the ECB's thinking.
Right, exactly. I mean, we've kind of got a pretty solid set of numbers from those four countries, generally kind of exceeding expectations. And at the same time, we do kind of see inflation data sort of decelerating across the board. And so I think in terms of kind of market reaction, I mean, we're seeing pretty strong confidence right now that we're going to get a rate cut around June. But I think the question after that is, if you look at the U.S. experience, it does seem like, the path back to 2% inflation could be bumpier than expected. And to what extent could the ECB diverge from the Fed? And I think that's sort of the question here. And that's why we're still seeing a pretty wide range of opinions from ECB officials.
Yeah, which, Marcelo, is also, I guess, the problem. If you're looking at how to put your money, where to put your money, a lot of the focus on the Fed, and I don't know whether it's really easy to get out of this gravitational pull from the Fed. So almost, unless there's a huge downturn or big downfall, inflation here in Europe, do you just follow the Fed?
So listen, I think the ECB has the conditions to move ahead of the Fed. We look for the ECB to move in June already by cutting rates. They seem to pretty determined to do it. What they do afterwards is another question. But they do cut in June, we think. And I would be surprised, however, if the Fed is able to cut any time before December. So when you compare the two, it's very interesting. People talk about the last mile on the inflation effort. In the U.S., the last mile is looking longer. Keep in mind, in the U.S., you talk about miles. In Europe, you talk about kilometers. And a mile is longer than a kilometer. So the case for rate cuts by the ECB, I think, is much more compelling than the case for cuts by the Fed.
Marcelo, how concerned are you about Germany? We had this wonderful conversation also with the EFO president. I mean, it's a little bit better than expected, but actually there's just not that consumption that maybe we're expecting. And when you look at services are okay, manufacturing still not there.
Yeah, absolutely. You see in Europe in general, services actually doing well. Manufacturing in Germany actually is a different aspect. But let's keep in mind also that Germany is quite dependent on exports and therefore on the global demand, particularly in China. And the prospects in China are one where, listen, the first quarter was better than expected. People revised up their numbers for the year. But prospects going forward are a bit more challenging.
A lot of earnings. I mean, we almost can't keep up. A lot of the automakers are actually struggling today. Is there a common theme? I know Bloomberg Intelligence did some work on, very early U.S. earnings, and actually 80% of them seem to have beaten expectations.
Right, exactly. I mean, it's pretty amazing how strong these numbers are even at this stage of the cycle. And in general, in the U.S., I mean, among large caps, the earnings growth is still exceeding expectations. And I think part of that kind of speaks to the continued resilience of the American economy. But part of that is also about a lot of these long-term themes. I mean, we kind of saw the effects of AI demand, even on Samsung's profits these couple of days. And I think you're seeing that a lot of businesses are kind of investing in these AI tools, investing in cloud, kind of regardless of where they see the economy right now.
So is it difficult to break down? I mean, we tried to do it yesterday a little bit. Is it a common theme amongst them? Is it really more regional, like Europe versus the U.S., or is it really sector by sector?
Yeah, I mean, I think part of it is a sector story. I mean, what's pretty amazing is that if you look at, people always talk about the Magnificent Seven, but it is true that kind of despite how much they rallied ahead of the market, I mean, they have kind of the earnings to back it up. And so if you're an investor who's just kind of investing in S&P 500, I mean, a lot of kind of your profits kind of in that index are coming from these stocks. And so I think it really speaks to like the winner takes all nature of tech, which is quite different from, I guess, like a lot of the past trends.
Marcelo, how does that cross over into your research world? Are we creating good quality companies in Europe like the U.S. that can grow?
Listen, I think for the equity market, the important thing here is how the economy performs. And we do see quite convincing signs that the economy is looking better. We think the times of stagnation in the Eurozone over the last year or so are over. We do see these green shoots becoming more clear. We look for gradual recovery going forward because we do see real wages picking up, which should help consumption. We should see also continued signs that the peak of the impact of previous monetary tightening is getting behind. So the prospects, therefore, look quite encouraging for the Eurozone.
Marcelo, we're also always trying to look actually at some, mismatches when the economy is telling us one thing, when companies are telling us something else, or even what we're seeing with gold and, for example, treasuries. Are you seeing anything worrying in companies, maybe some trends in companies that's not reflected in the economy or vice versa?
Listen, what we see as being worrisome is actually not so much in the Eurozone, but the fact that in the US things are almost too hot. Too good to be true, in the sense that too much of strength in the economy, along with pressures on inflation, as we have seen lately, and we should see in DCI today in the US as well, raise questions about the Fed's ability to cut rates.
Okay, and we'll talk a lot more actually about the Fed and the strength in the dollar shortly. Marcelo Carvalho there from BNP Paribas and Bloomberg's Justina Lee stays with us. Now, coming up, traders warn that Japanese officials that the beleaguered yen will need sustained support. So more on that next. And this is Bloomberg.
Fed decides.
Jay Powell pumping the brakes on rate cuts.
Hikes are off the table. No cuts looking perhaps a little bit more likely.
You can't say there's a whole lot wrong with the U.S. economy.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
Our policy rate is likely at its peak.
The threshold to cut rates is a little higher.
We're redefining patience.
Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern. Context changes everything.
Well, a lot of the focus is from currency traders on dollar strength. Of course, we had the Fed tomorrow, and markets really positioned for a little bit more of a hawkish stance from the Fed. Let's return to our discussion with Marcelo Carvalho, BNP Paribas Global Head of Economics, and Bloomberg's Justina Lee. So thank you both for sticking around. Marcelo, when you look, and you were making this point, that there is a worry actually that the U.S. economy is overheating, and we could see it maybe in some of the earnings or certainly some of the companies. What does that mean for Jay Powell? I mean, there's one lonely voice that's not so lonely anymore, and that's Larry Summers, saying actually everyone's focused on the cut. We could see a hike from the Fed.
So listen, I think what the Fed will do this week is, first of all, not change the policy rate, of course. It's too soon for that. But more importantly, let's watch the statement, and even more importantly, the press conference. I think what Powell is going to do is to reinforce the recent communication from Fed speakers, indicating that the recent numbers on the inflation side do not give the confidence that the Fed needs to start cutting. So it's on hold for quite a while. Although, that being said, I do continue to think that the bar for a rate hike is very high. Yeah. So we shouldn't realistically be talking about a hike. I mean, never say never. Most likely it's going to be next move being a cut, but it's still a bit far away.
Next year?
We think December might. I think December could be already. There are risks, of course. Cuts earlier than that bump into the problem of the election. The Fed probably doesn't want to be changing policies too close to the election. So it could be December, but there are risks that it could be later if the economy continues to be very hot and inflation is not comfortable enough for the Fed to move.
Justina, we focused, of course, a lot of time on exactly what's happening with dollar strength, and I want to ask about a lot of these emerging currencies as well. But how much higher can dollar go?
Yeah, I think that really is kind of the big question here. And I think, if you kind of look at the yen, I think the question here is kind of, has the yen weakness run its course? I mean, it's not just kind of like about, the speculation of yen intervention, but also kind of the differing paths between kind of those two countries. And I think another big question is China here, right? Because there's been a minority of people who are wondering, are we going to get a big devaluation out of China to support exports? I think, it's not definitely no one's base case, but I think that is going to be another big question in the market.
Marcelo, you used to, for many years, actually be in charge of emerging markets. I mean, this is an exciting time for emerging markets, but actually a wobbly time with also the blessing of Janet Yellen to possibly intervene in currencies.
So listen, the U.S. being so strong as it is as an economy and the Fed keeping rates high for long, it is understandable why the dollar is so strong. Now, intervention on the currencies work if you have either a multilateral action or else things going along with fundamentals. I don't think either of those circumstances are in place right now. don't expect multilateral action like a Plaza Accord anytime soon. From the U.S. point of view, it's my currency, your problem. And also, in terms of fundamentals, if you think about the BOJ, for instance, in Japan, it's quite clear that sooner or later BOJ will have to hike again. So intervention without multilateral action, without the fundamentals, tend to be quite short-lived.
I know that the BOJ is actually releasing a set of data today that can help us understand the mystery of what, if they've intervened, by how much. I mean, does it make that much of a difference?
Look, it does for the very near term of the market durations. For the medium term, however, I think the fundamentals prevail. And again, I think the fundamentals indicate that inflation pressures are building in Japan. They started moving already in terms of the rate policy. We think there is more to come. Governor Ueda seemed to be on the dovish side lately, so it doesn't feel like in a rush to hike. We think a hike, however, is coming in September, and there's further hiking down the road.
And again, Justina, this is, it's excessive. They worry about excessive currency moves, but it's really the pace of the moves instead of the level.
Yeah, I think one level that a lot of strategists are looking at is kind of the 10 yen move. But of course, it's kind of, you need to think about like over what amount of time. But you're right in that everyone was looking at 160 versus the dollar. But it's really about the speed. And I think that's why the move on Monday was so remarkable, because it was kind of like pretty rapid. But I think going forward, even if it did intervene, I think the question is, can you really sustain this given the differing paths of the rates?
Marcelo, how do you read China right now? So, again, it could be some help if it's exporting deflation, but there are also many, many unknowns about how much they can really support this economy given real estate troubles.
Yes, so listen, there are two issues here. Yes, China could be exporting deflation, which is helpful for the countries that are fighting inflation, of course. However, for most of their countries, the key concern on inflation right now is not so much external but domestic. Services price inflation in particular have proven to be quite sticky in many places, including the U.S. in particular. So I doubt that China can really save the day in terms of the global inflation problem. On the other hand, the second point, though, is that when you look at the outlook for Chinese growth, it's one where the economy is facing both cyclical and structural problems, challenges. So structurally, the attitude of the authorities toward the private sector is something that comes to mind, but cyclically as well, what happens to the property sector. So we did have strong numbers in Q1. However, how sustained that is, it's an open question.
Marcelo, away, I guess, from renminbi and yen and some of the others, are there any currency that will really suffer if the dollar remains at these levels or goes even higher?
So listen, the currencies that have particularly low yields in emerging markets in particular are ones that would be suffering. I can think about Chilean peso, where the authorities, for instance, have been cutting quite aggressively. That reduces the attractiveness of the local currency.
Okay, Marcelo, thank you so much. Marcelo Carvalho there from BNP Paribas and Bloomberg's Justina Lee. Now, coming up, record revenue at Santander. Costs, though, are weighing on the overall results. So we'll hear more of our interview with the Spanish lender's chief financial officer. This is Bloomberg.
We have businesses in Europe that will benefit from lower rates, but also businesses in South America and in the consumer side that will also benefit as rates go down. We have negative sensitivity to rates in South America, positive sensitivity to rates in Europe. So we will have a positive combination, and now we see NII sequentially growing quarter after quarter this year, even with the current estimates for rates in the US, South America, and Europe.
Good morning, it's Guy. What's the outlook for a pickup in revenue in Brazil?
Brazil will benefit from lower rates. With rates peaked at 13.75, we think they will be at 9.5 this year, even lower next year. Lower rates means more activity, better asset quality, but more importantly, as I said, our sensitivity to rates in Brazil is negative, which means that revenue will benefit from lower rates. We are starting to see that already in the first quarter, and it will accelerate towards the second half of the year. So the outlook for revenue in Brazil with this level of rates and the outlook for even lower rates in the second half of the year or next year is even better.
Well, the Santander chief financial officer there speaking to Bloomberg. Now, the bank's push to expand investment banking drove up expenses in the first quarter, tempering stronger than expected income from lending. Now, we have some results, preliminary results from Europe's top economies. Germany, France, Italy actually all grew more than anticipated. Now, what this is suggesting, although we have to see some of the other countries and, of course, whether the trend really stays like that, it suggests a recovery is taking hold in the region after a mild recession last year. Now, a bumper series of data also expected to show the Eurozone's prospects could be brightening after higher inflation, rising interest rates and weak global demand saw output shrink in the second half of 2023. So we'll see with the full results a little bit later on. Of course, helping revive the region is Germany, which exited quite a difficult time, especially because of the troubled industrial sector. Coming up, we'll take a look at the investment outlook in the UK. We'll be joined by Dominic Johnson, the investment minister in the UK's Department of Business and Trade. That's next, and this is Bloomberg. Now, the HSBC chief executive, Noel Quinn, is unexpectedly stepping down after nearly 5 years in the job. Europe's largest bank says they'll consider internal and external candidates. A difficult start to the year for German automakers, with earnings tumbling 20% at VW and more than 30% at Mercedes in the first quarter. Plus, all four of the euro area's largest economies performed better than expected in the first quarter, suggesting a recovery is taking hold in the region. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So Bloomberg understands that BHP is considering making an improved proposal for Anglo American. That's according to people familiar with the matter. BHP's initial offer of $39 billion was rejected by the London-listed miner. But if the mega deal were to be successful, would this be another nail in the coffin for UK listings? Well, let's discuss this and much more with Dominic Johnson, the investment minister in the UK's Department for Business and Trade. Lord Johnson, thank you so much for joining us.
Thanks for having me. It's in this amazing building, bustling with Bloomberg stuff.
It is. I mean, this is like proper foreign investment coming into the UK capital.
Sure.
Lord Johnson, first of all, no relation to Boris Johnson, because we've had emails about this.
Please, I'm no relation to Boris Johnson.
It's good to put it out on the table.
Someone said, am I his father, the other day, which I still find a little bit distressing. But no, I'm no relation to Boris Johnson, so no, you're okay.
So, Lord Johnson, when you look at some of the investment, and there has been, some pretty strong investment coming from abroad, especially with cars, which I want to talk about in a second.
Totally.
But if you look at BHP and Anglo, so there's a concern that some of the commodity-rich mining companies want to move away from the UK. Would a takeover like this be problematic for, FTSE and UK PLC?
Well, first I think you'd let free markets be free. And actually, what I've been quite interested by over the last 10 days or so is we've had 3 takeover bids of 3 UK companies, Royal Mail, Darktrace, and now Anglo American. And sort of my question to you is, what does that say? I think it implies that this market actually is a great market with some phenomenal companies, and people can see huge amounts of intrinsic value that's still to be realised. So, in some respects, it points to the positivity of the opportunities in the UK rather than sort of some gloomy outlook.
But they could take them out of the market, right? They could put them elsewhere.
They can do that. But if you look at what the potential buyer of Darktrace has said, for example, they've made it very clear this is a UK company. It's staying in the UK. They're going to invest in it. Obviously, Royal Mail is going to stay in the UK. I mean, I think that we've got to be sort of quite rational about this. We want to support the markets. We're bringing important reforms, by the way, like the Edinburgh reforms, to get more domestic capital back into the markets. And we're also doing sort of sensible deregulatory measures, such as around MiFID II, that I'm sure many of the people watching this programme will groan when I say
MiFID
II. These are important changes because we need a vibrant small-cap market, we need a vibrant fund management market, and these things will make a big difference. So I'm actually very optimistic, and as I say, what are the telltale signs of a stock market? It's opportunities, and people are seeing the opportunities today.
But see, the French take a different view to where it comes to their, homegrown companies, is that they actually don't want foreign buyers to come in too much, because then you lose control, they don't become UK champions anymore, in their case French champions. Do you have that nagging feeling that actually at the margins UK PLC needs to be protected?
Well, listen, the reason why you're here and you haven't got your head office in Paris is because this is an international free capital market, and the LSE is still one of the major markets in the world. This is an international capital for finance. You can't have that and protect your market at the same time. So I don't relish the French position. I mean, I think it's a phenomenal economy. I'm not derogating it. But we've done the right thing here. This is a truly capitalist market, and it will enable us to have the capital, to have the innovation and investment to drive forward. So, single companies must move. It's got to be free. We support that. But we have to make the reforms domestically to ensure that our own domestic market can function properly.
I mean, if you look at big oil and gas, if you look at mining companies, there's a belief among chief executives that there's a European discount because actually investors, pension funds don't buy into them as much as they buy, for example, Exxon and Chevron. Now, that can be debated, but do you think there's a problem?
Yes, I do, actually, and I think we've recognised it. So in terms of, well, I'm not sure about specific sectors, but in terms of the domestic pensions industry, in Europe it's very sort of debt-based. And in the UK it's become very debt-based too. So what we're trying to do is to push pension funds and the big life assurance companies by encouraging managed risk to bring them back into the market, both public and private. I mean, the great statistic, which I'm sure you've talked about on this show, I think 30 years ago, half of all allocations were to UK domestic equities. Now I think it's 3%. So that, even if you took a global MSCI basis, it should be 6, 7, 8%. So there's something wrong there. So we need to look at how we have our regulatory frameworks and how the culture needs to be managed to as I say, to ensure that we have properly risk-controlled investment policies.
I mean, again, you know, some critics would say that the UK has become a yield stock nation, so that there's a danger that the new listing models, you know, pushes companies to give back dividends instead of reinvesting.
Totally agree. I totally agree with you. I mean, I think that we've got to be quite proud of those new companies that are very innovative. And of course, they're not the classic sort of UK stock market companies. Obviously, they've got short track records. They probably have high levels of debt. They're not paying dividends because they're reinvesting. So there's a cultural issue for sure, but there are also some structural things that we can do. And we recognise that. So I think what the Chancellor's done, he's been really innovative in his Edinburgh Reforms and Mansion House Compact. So people watching this show, you know, it's about the future. What country is actually looking to the future to try and correct some of the problems of the past? And the UK definitely is.
But Lord Johnson, I mean, I think that what I hear the most is actually that this doesn't necessarily have a risk-taking culture. So be it the pension funds or the regulators, it takes time to change that mindset. And if you're going to grow, you need to take risk.
Yes, of course you do. Risk is everything. So by trying to manage risk out of the market entirely, you have serious unintended consequences, as a result of which you derogate your long-term returns. So one of my new jobs, as we were talking about earlier, is regulatory reform. So it's not just in financial services, it's across the board. And it's making regulators think about how they look at risk within their universe. And also to provide, look at regulation as a service rather than as a blocker. So we have tended to layer on a lot of regulation. And the benefit is to change that is free, it doesn't cost anything from the Treasury, and it releases people's ambitions. So this agenda is incredibly important. And by the way, it's a Conservative government agenda.
What's most frustrating being a minister right now? I mean, again,
that's a great question.
You're looking at elections soon in the next 8 months, but at the latest, and the Conservatives are doing pretty terrible in the polls.
I mean, I think the biggest frustrating thing for me coming into government from business, I spent 30 years in this world, is trying to get the message out. And when I tell people the reality of what's happening in the UK economy in some of the new industries like advanced manufacturing, clean tech or whatever, they're amazed. And they say to me after these presentations, we didn't know that. Why didn't someone tell us? So the sort of message opacity is the biggest issue for them.
They do their research, so they don't need someone to tell them, right?
I think that's not true. I think you have to market. You've got to go out and sell. When I go to the States, people, I think, have taken sometimes a negative post-Brexit view of Britain, when actually the opportunities are huge and the vision is enormously positive. So the frustration for me is sometimes the difficulty in getting our really strong message out about what we've achieved and what this economy is doing.
On Thames Water, I mean, a lot of shareholders are saying, look, this is the water utility company is uninvestable. They'll probably be wiped out in the administration process. Does that mean it's going to be much more difficult to attract investors to something that, frankly, was considered a boring and safe asset?
I mean, it's a good question. I'm going to avoid talking about a specific instance because, of course, that's very complicated and sensitive. And what I will say is that investment in our infrastructure is absolutely crucial. Yeah. And so we have to work very hard with all the regulators. That's also on the power side, by the way, where we need huge investment, water side, telecoms and so on, to make sure investors feel that we have a predictable and consistent policy framework and they can generate sensible long-term returns. So, I mean, I think in many respects this is an opportunity to rethink some of the mechanisms for attracting public capital, international capital, into these quite heavily regulated markets.
But Minister, I mean, you had investors such as China's Sovereign Wealth Fund, Abu Dhabi Sovereign Wealth Fund, the Canadian pension, Almers, in Thames Water. You must have fielded questions from them in going, what the heck happened?
Well, I mean, as I say, I left that to the Department for Agriculture, particularly to focus on, and the regulator. I think it's very important that actually regulators are independent. I've got obviously my views. My job is to go out and attract investment. Yep. And actually, you've got dozens of water companies with a lot of very happy investors. Companies like YTL or numerous other pension funds and sovereign wealth funds. They're heavily invested, and they're putting more money into the water sector. So you're always going to get, as you talked about, Anglo American, you're going to get isolated examples. And it's important that we don't then use that as a sort of template to distort the rest of the picture. And actually, we do live in free markets, and there has to be market successes, and they've got to be market failure and manage risks. But actually, the investor base is quite positive about water. And also the other utility sector, which is really exciting, is, of course, clean energy and power. And I think Ofgem have done a fabulous job in encouraging investment in that sector.
I mean, the car industry actually has gotten quite a boost, especially
the currency.
The car industry.
Currency's been amazing. I know,
especially
we're motoring.
for battery gigafactories.
Yes, incredible.
But then you have EV makers saying actually demand is slowing down a little bit. So do you need to scale back the amount of investment in some of these gigafactories?
We just started. I mean, the Tata Gigafactory in Somerset, it really did light the blue touch paper for an explosion in advanced manufacturing. And now we've got Stellantis making Fiats in the UK. You've got BMW committing to Mini. We've obviously got Nissan, which has been a huge leader and a crucial part of our economy for many decades. So I'm just amazed by what's happened in the last 18 months in our auto industry. Now, EVs, I was just thinking about this on the way in. It's not going to happen overnight. It takes time. We actually need to invest in charging points to make sure the infrastructure is there to support them. Frankly, we also need to invest in battery technology, which is what the British government's doing, putting a lot of money into Battery Innovation Centre and other such projects. So it will take time. And actually, that's what Rishi Sunak said a few months ago. He said, we're going to get there. We're going to get to net zero. We're going to transition our motor industry. But it'll just take time. And I mean, it couldn't be more exciting. I think we've had more interesting investment in the UK than any other country in the world, except probably China, when it comes to the EV industry. That's amazing.
Minister, how much money has the UK government actually pledged to make sure that these gigafactories go ahead?
Sure. So the overall advanced manufacturing plan is, I think, $4.5 billion. So it's a huge amount. We supported Tata with a meaningful allocation of capital. We supported Nissan. I think we've given support, really, to all the major car manufacturers in order to make sure their businesses are here. But also, you've got some quite interesting smaller businesses, like McLaren. I went to see them the other day, owned by the Bahrainis. They're developing amazing technology. And really, it's about production and technology. So you have to marry the two. And we've absolutely sat alongside these companies in partnership.
As a Tory minister, what are you thinking now? That you can maybe win the election, or you're just trying not to lose by too much?
I definitely think we can win the election. I think it's extraordinary that people should suggest that it's not something you want to play for.
Well, the polls are not in your favour.
I know the polls are often not in many people's favour. If you look back a year before the '92 election, we were 20 points behind. And by the way, in 2017, Theresa May was 20 points ahead when she went into the election and very nearly lost that to Labour. So there's everything to play for. What investors want to see is a consistent, stable and predictable environment. And Rishi Sunak and our government offer that. And also the real plans. We're putting our money where our mouth is in advanced manufacturing, in life sciences, in deep tech and AI. So I'm enormously optimistic. And money's pouring in. I couldn't be having more fun going out and telling people about the UK.
Do you think the Prime Minister has a date in mind for the election? Or he's still figuring it out?
Well, he hasn't told me if he does. I mean, I think he's been pretty clear that we're looking for autumn is a reasonable, logical time for that. But the reality is, this is a great country to invest in. And so my job, I've got, hopefully 6 months before an election, is to go out and tell people the story and try and get more money in. It's a daily grind. Every day, another dollar.
That's a perfect elevator pitch, Minister.
Thank you very much
for joining us. That was Lord Dominic Johnson, Investment Minister at the UK Department of Business and Trade. Now, coming up, we'll talk planes, trainers, and automobiles as we bring you a roundup of European results. This is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, from trainers to planes and even autos, it's been a busy morning, I'll say, of European earnings. Both VW and Mercedes have seen their shares fall after their earnings slumped. Now, Adidas reported increased profitability in the first quarter, boosted by demand for sneakers like the Samba. Now, let's unpack the numbers with Bloomberg's Oliver Crook in Berlin. Ollie, we can't see your shoes. They're probably a pair of the new cool ones, but a disappointing morning in general for German earnings. There's a bright spot, Adidas.
Yeah, I hate to disappoint you, Francine, because my shoes are not new and cool. They're Converse, which is actually owned by Nike, which I looked up just before I went on air today. But listen, the story at Adidas this morning is that, the profit accelerated more than anticipated. We are seeing a lot of pricing power for Adidas in the market, which is a positive sign, particularly in contrast to what we've seen from the autos. Inventories have come down by 20%. This was a major issue last quarter when we were talking about their earnings. And they've really come out, kind of, if you step back in the macro, the whole Yeezy controversy fairly well, being able to to sell some of that inventory because, they didn't want to destroy the products, and also that they were able to sort of say that they're going to donate some of it, but really came out a lot better than anticipated. And when you look at the regional breakdown, the strong region this quarter was Europe, up 14%. China is starting to recover. You see 8% there. That's after some sort of nationalistic buying, some concern last year there. And it's actually the North America, which, whose economy is supposed to be the strongest right now. It was actually down about 4%. They expect that to recover in the second half, but that's really the story going into the corner. And the shares are down a little bit. I'll go to the last refuge of when we don't really know why, maybe a bit of profit taking after the stock was up 25% this year.
Okay, I love that. That's always what analysts say when they don't quite know how to explain it. Just how bad a quarter was this for autos, Ollie?
Yeah, so to contrast, the auto sector is a really awful quarter. When you look at the earnings, it was a tough comp from the first quarter of last year. I mean, for Mercedes, it was down 34% in terms of profit. Volkswagen down 20%. Stellantis also out down 12%. You saw also their margins came in well below anticipated from what the analysts were looking for. So you guys see that in the stock this morning. There's an issue of cyclical demand here and then sort of a general downturn in demand for cars more broadly. They're also switching up a lot of their models right now, which takes a lot of money and it takes a lot of time, but also EV demand. BMW, of all the German automakers, was really the only one that was able to hold on to the EV market in the first quarter. Volkswagen and Mercedes all saw that go down. They're all trying to convince investors today that Q1 is actually going to be the trough for sales for the auto sector, but this morning the investors not necessarily buying that with the shares sharply down for all those.
Ollie, thanks so much. Bloomberg's Oliver Crook in Berlin. Now, from cars to planes, two of Europe's largest airlines are planning to cut costs after a difficult first quarter. Lufthansa plans to freeze projects and review hiring in some areas. It was forced to pare back its earnings outlook for the year. Now, Air France-KLM will freeze the hiring for support staff after reporting a wider first quarter operating loss. So for more on all of this, let's get straight to Sid Phillip. He is Bloomberg's senior global aviation reporter. Sid, you always make us smarter on all things planes and, of course, airlines. So what do the first quarter earnings tell us about the difficulty in the sector?
So the first quarter is typically the weakest quarter for the airline industry because you're coming out of the winter going into the summer. And the summer is essentially crucial. But it also tells us about the difficulties that both Lufthansa and Air France have had. Air France has struggled with capacity. Lufthansa struggled with strikes. Both of them have struggled with costs as wage costs go up. And essentially, it gets much more difficult in terms of just their overall geopolitics. And so both the airlines have talked about how they're going to look at cutting costs and as a way of trying to return back to profitability for full-year earnings.
So, as you say, summer is so crucial. When do we get a sense of bookings for the summer? Do people book in advance, or have we changed the way we book air flights?
So it's actually a really good question, because at the moment, people tend to book in now is when people start booking for their summer holidays in Europe, typically. And so in the next few weeks, we'll really see what the booking curve looks like, even if we don't really know what the full profile of the bookings look like. So for the airlines, the next few weeks are crucial as they get demand sort of ramped up and they look at people sort of booking and locking down their holidays.
Is a lack of aircraft a problem for the industry?
It is a massive problem for the industry at the moment because both Boeing and Airbus have struggled to produce enough planes. I mean, Airbus has struggled with supply chain issues. Boeing is struggling with FAA caps on its production. So both of them have really struggled to get airplanes into their fleet. And essentially that's meant that older aircraft are still going strong. And essentially there's also huge demand for older aircraft. So airlines that were looking to typically look at leasing new aircraft from the market, the lease rates have gone up and it's much more difficult to get new planes. And so it's going to be a very tricky scenario for new aircraft as well as used aircraft. I mean, used aircraft are having a resurgence, a moment in the sun, really.
Yeah, so interesting. Sid, thank you so much. As always, Sid Phillip there, Bloomberg senior global aviation reporter. Now, coming up, we talk crypto, and Binance's fortunes are set to grow, potentially making its ex-chief executive the richest U.S. inmate ever. We look ahead to his sentencing hearing later today and explore the cryptocurrencies exchange empire in the big take. Next, this is Bloomberg.
We obviously would like to have more consensus, agreement on some of the biggest and more important reforms that Spain need, controlling the public debt over the long term, sort of fiscal consolidation path, increasing productivity, the housing market where we are seeing a scarcity of supply of new housing. All these things are important. They would benefit a lot from large majorities. So we would all want to see that, but at the same time, I think we're all adults and looking at what is the difficulty in politics today, taking it with a pinch of salt.
Well, CaixaBank Chief Executive Gonzalo Gortazar speaking exclusively to Bloomberg about the political instability in Spain. Now, the Binance ex-chief executive, Changpeng CZ Zhao, is about to learn if he'll be the richest U.S. inmate ever in a sentencing hearing later today. But with friends on the company's board, his ownership of the exchange is intact, and the mother of his children helping to run the show, the company he built continues to thrive with his lingering influence. Well, let's get more from Bloomberg's crypto reporter, Emily Nicole. Emily, good morning. So remind us how we actually got here.
So it's been a tumultuous time for the crypto industry over the last few years. We had the blow up of FTX in November 2022, and at the time, Binance was even considering buying that exchange. And then only a year later did we see Binance itself come under the microscope in the legal landscape in the US. Binance agreed to pay $4.3 billion in penalties for anti-money laundering and sanctions violations, and CZ Zhao himself also agreed to step down as CEO and pay a penalty.
So, Emily, where does this leave Binance, the company, and CZ's fortune?
Well, Binance has continued to operate as normal almost. It's the world's largest crypto exchange. Its dominance of that has not changed. It's maybe ebbed a little bit slightly, but, all in all, it's still the biggest. Zhao is no longer at the top as well. There's a new successor in his place, Richard Teng, but he's still the controlling shareholder of quite a lot of Binance entities, and that's not likely to change. So his fortune, in essence, is intact.
So what parallels should we draw between CZ and FTX's disgraced founder, Sam Bankman-Fried? And do the pair's guilty verdicts actually spell an end of an era in crypto? It feels very different, Emily.
Well, the crimes were very different. What Sam agreed to in his FTX's in case was, he basically admitted to misusing user funds in when he was charged. And held his hand up, so sorry, but that's why his case is a lot longer. His term is a lot longer than what Zhao is facing. Binance never admitted to misusing any users' funds. It simply had some compliance missteps, and that's why the two are very different. The landscape for crypto, however, is changed. We've had two big platforms blow up in the past 2 years in terms of whether or not they were now there or not. There's still those legal issues there. And so going forward, a lot of institutions are thinking about assets like Bitcoin with the ETFs in the US, but whether or not that trust for exchanges is there is another matter.
Emily, thanks so much. I mean, it's such an interesting space because also a batch of ETFs directly invested, of course, in crypto debuted in Hong Kong today, heralding this competition between Hong Kong and the U.S. for some of these possible Bitcoin products. Emily and Nicole, they're looking at crypto for us. Now, we're getting a little bit more data. Again, we had France GDP, we have Italian GDP, and Germany GDP that was better than expected. Eurozone GDP actually breaks in just a couple of minutes, so we'll see some of the other countries and how that amalgamates. Well, Bloomberg Brief is up next. They'll have a full analysis with Danny and Manis on where the dollar goes next, on, of course, the Fed and everything to do with crypto. This is Bloomberg.